Good afternoon, everyone, and thank you for joining us today. My name is Deepthi Kanoria, Marketing Manager of Global Mortgage Group, and I will be your host and moderator for today's webinar. So, before we start with the presentation, let me give you a quick introduction to our company and our speakers. Global Mortgage Group is the world's only truly global mortgage platform connecting the world's best banks and lenders directly with borrowers. We are the only mortgage specialist in Asia with a primary focus on expats and foreign nationals. We have direct access to hundreds of lenders in the US, UK, Australia, and Canada to offer rates that are better than banks with better transparency, service, and speed. Our position today rests squarely around a detailed and extensive knowledge of the mortgage market and our ability to source high value real estate deals for our clients through our unparalleled network of private banks, family offices, and high net worth lenders. Today, we are joined by our two speakers, Donald Clipp and Robert Chadwick, co-founders of Global Mortgage Group. Donald has been an investment banker for 25 years with banks like Citigroup. He has also managed hedge funds and family offices in Asia. Robert has over 25 years of wholesale mortgage lending experience and prior to founding GMG, he was the head of Citadel Servicing, one of the largest non-bank lenders in the US. Combined, they have an experience of over 50 years in US mortgage market. In this webinar, they'll talk about the current US property and mortgage market scenario, the challenges and the process of obtaining US mortgage overseas. We'll conclude the call with a Q&A. So if you have any questions, just type it into the Q&A tab and we'll answer all of them live. Any remaining questions can be emailed to us at hello@gmg.asia. Donald, over to you.
Thank you, Dipti, for that incredible introduction. I'm extremely excited to be here today and to speak to all of our attendees. And I'd like to thank ITC for hosting this event. We're really excited to share our knowledge with your current members around the world. So to begin with, let me talk about, next slide, please, Dipti. So first of all, let's focus on the US market. So why the US market? So the US market is the largest residential market in the world. It's also the largest target for residential investments by foreigners globally. Now, given the recent global uncertainty caused by the pandemic, there's been a real trend in interest to own US dollar assets, of which real estate obviously is one of them, and it's also perceived as a safe haven. Last but not least, the opportunity to create personal wealth by owning property has never been more attractive for overseas expats and foreign investors globally, given the direction of interest rates, given the direction the interest rates are at the moment. Next slide. So there are four main benefits of owning and investing in US real estate, and I'll address them now. The first one is the low down payment. For many of our loan programs, our down payments are as little as 20%. So that is to say, if you want to buy a $50,000 home, you would only have to put down 10% down payment. Number two, our interest rates. US mortgage rates have never in the history of the US been lower than they are now. Right now, for the best borrower, 30-year fixed rate mortgages are under 3%. That is to say, or put another way, for 30 years, interest rates on your mortgage will never be higher than 3%. Number three, positive cash flow. Aside from being able to earn investment income, you can grow in your capital appreciation as well. Homes that cost $100,000 to $120,000, you may be able to get mortgage rates of at least $1,000. So always generating profitable cash flow. And I think in this environment of uncertainty, it's really prudent to think of alternative income sources. Fourth, but not least, is capital growth. The U.S. real estate has been one of the most stable real estate markets in the world, increasing over 30% over the past 10 years. And in much of the major cities, which I'll discuss shortly after this slide, the capital appreciation has been much more. Dipti, next slide. So why do people use mortgage over cash? Well, for example, last year globally, foreigners purchased 500,000 homes worth a little over $250 billion. And because it's so hard to get a mortgage, 80% is paid. 80% of these buyers paid all of it with cash. Now, normally in any country, the US, UK, Australia, Canada, it's almost 98 to 100% of all mortgage purchases use a mortgage. But it's because it's so difficult to get a mortgage when you live overseas, most pay with cash. Now, this is where our company is here to kind of help and educate the members and attendees of this call on how to obtain this mortgage. So one of the benefits are less money up front. If you want to buy a $500,000 home, all you have to do is put up $1,000 for a down payment, which leaves the extra $400,000 more flexibility to invest elsewhere. You can invest in the stock market, in bond portfolio, or even buy more real estate. And last but not least, having a mortgage improves your credit score. It shows credit bureaus that you have the ability to service a mortgage and the capability to keep your mortgage payments on time. And in many of the developed markets, having a strong credit score opens up many other opportunities. Next slide. So why current US mortgage options are difficult? So as I mentioned in the previous slide, it's very difficult to obtain a mortgage when you don't live in the country. Now, for the few international banks that can offer a US mortgage, they would require a minimum of 50% down payment. You would need a US credit score, which many people overseas don't have. You'd have to open an account and keep a minimum down payment. So that's to say of 100,000. So that's to say if you wanted to buy a $500,000 home, you'd have to keep $100,000 in their bank account throughout the tenure of your mortgage. That's 30 years. You would need 2 years of tax returns and income verification. This process would take, on average, 4 to 6 months to complete. You would need to speak English and match their time zone, which often or not, you'd have to be calling the banks in the US very late at night for many of you on this call. And these banks only approve, at the best, 40% of their applicants, with many getting denied at the very end of the process. That's to say, 4 to 6 months into the process, many late nights, you get a cancellation. This isn't easy or attractive for any overseas buyer. Next slide. So how do you obtain an overseas mortgage? And this is really gets into why we want to educate all of our attendees on this. Outside of the US, there is only one global mortgage specialist with access to, right now, close to 500 lenders globally. In the US, we have just about 150 lender programs designed specifically for overseas expats and foreign nationals. So I want to highlight 3 key points. One is fast processing. The GMG option takes 30 to 45 days to complete versus 4 to 6 months for traditional banks. Low down payment. Because we have the option of looking through 150 different lenders to find the best loan option available for your particular situation, we're almost always going to be able to find the best loan option available. Our programs require as little as 25% down payment for foreign nationals and as little as 20% for expats. This is much less, almost more than half less than international banks. And it's easy to qualify. Because we work with our lenders to focus on what an overseas investor can provide, our approval rate is very high. In fact, we just looked today at that our average approval rate is over 97%. Next slide. So, as you mentioned earlier, and I think this is no surprise, mortgage rates are very low. In fact, in the US, mortgage rates dipped below 3% in the US, first time in history. Now, many economists believe that this could go a little bit lower, but none of us can predict where they will settle. So the best time to get to get a mortgage to buy property is now. In fact, if you look at the economic data, purchase applications are up 33% and refinancing applications are up 11%. And what that means is that despite the global pandemic, there's 33% more investors want to buy new property this year than last year because of the interest rates. They're at all-time lows. Next slide. So where are people buying? If you look at this map and this chart, it's pretty clear that the cities that are highlighted are where most of the gentrification is happening in the US, from tech to industrial gentrification. In fact, just 2 weeks ago, Tesla said that they would build the largest factory in the world in Texas. So if you look at this data, you can see this is consistent with a lot of where our loan demand is from overseas investors. Houston, Texas, California, Washington, New York, and Georgia. Next slide. Now, if you look at the property trends, I highlighted this a little bit previously. Purchase applications are up 33% year on year. Refinancing applications are up 11% year on year. And refinancing means these are investors that have property that they fully paid for, and they want to take money out of their equity for their own purchases, for their own reasons, or investors that have a mortgage that want to refinance it into an historical low rate, saving them on their monthly mortgage payments and increasing the cash yield that they're generating on their rental income. Home seller return on investments right now is at 36%. So that is to say that anybody selling their home recently, they've made 30% profit from where they purchased. That number is astounding in the US. Now, if you look at new home sale prices, that's to say that home prices are up 3% year on year, even during this global pandemic. Next slide. So with this, I'm going to leave the remainder of the presentation to my partner and co-founder, Robert Chadwick. Thank you.
Robert. All right. Sorry, I was muted. Thank you, Donald and Sam with ITC. My name is Robert Chadwick, and I'm one of the co-founders of Global Mortgage Group. And on my half of the presentation, I will be covering what is a common topic, which is how has the impact of COVID-19 affected the U.S. mortgage market. I'll touch on U.S. citizens, if anybody happens to be a U.S. passport holder. I will discuss what options are available for you. And if you're not a U.S. passport holder, but are still looking to invest in U.S. real estate, I'll explain where things were pre-COVID, where things are now, and where we do believe the market will come back to somewhat norm. Next slide, Dipti. So, I think just in general, there are a lot of challenges for a U.S. citizen living abroad trying to get a U.S. mortgage. There's the lack of W-2. As most people work for foreign employers, there is no requirement to file a W-2. Foreign earned income, often if it's in different currencies, the conversion, if a bank is not familiar with this type of transactions, can be quite challenging for the underwriters. Items such as employer paid housing, is that included in income, or how is that affected with how the borrower qualifies? And I think most importantly, and what we see often, is there are a lot of US citizens that are merely just passport holders, whether they were born in the US or they were educated in the US, but never really had extensive work history or credit history. So their credit is either very, very light or non-existent. So with those issues, it makes walking into a bank in LA or New York to be quite challenging. And it's not that they can't do the transaction. It's often that they're just not familiar with it. So if they are able to help you, there are a lot of issues which could be easily resolved if you were to go to a company such as GMG. Next slide, please. So, the U.S. citizen loans during COVID, it's adjusted all over, not just the loans that we're offering, but in general. A lot of this had to do with the secondary market. I believe Donald touched on this briefly, but most mortgages in the U.S., even if it's done by a bank such as Bank of America or Wells Fargo, these loans are sold on the secondary market. And because there was a lack of confidence when COVID hit, with unemployment and really not knowing where the prices may land up or end up in the next, say, 3 to 6 months, the confidence in the secondary market was very minimal. And that's what made the government step in, and basically Fannie Mae had agreed to purchase any U.S. mortgages as long as they were in conforming loan limits. That there wasn't going to be any hassling on it. So the way that they got around a lot of these issues is they raised certain minimum requirements. For example, pre-COVID, a 640 credit score was sufficient enough for a Fannie Mae mortgage. Now we're looking at a minimum credit score of 720. So that is actually increased quite significantly. Items such as 12 months reserve requirement, which depending on the bank, a lot of banks didn't require this. Now almost every bank is requiring this to meet the new guidelines, meaning that in some financial account, you need to have at least 12 months of your mortgage payments readily available. Now, if you're a US citizen and you have a 401k or some sort of IRA, or even a global stock portfolio or something in your company, in Singapore they have a CPF, that could actually be used. It's up to the underwriter's discretion, but as long as you can show there's some sort of 12 months of liquidity, we should be fine. Employment verifications, this has gotten to be quite strict. Pre-COVID, it was just a matter of basically checking your employment before they funded the loan. Now your employment is checked at the application process, at the approval process, and the day of funding. And this, again, is just with all the layoffs and the unemployment, not just in the US, but globally. This is just to make sure that they're covering the updated guidelines. And some banks, not all, so it's still possible to get as much cash out as you would like, but some banks have limited the cash out to, say, 300,000 or 500,000 US. If you have a jumbo loan, So anything that is exceeding conforming loan limits, and conforming loan limits are county-based. So just as an example, if you were to take New York or Los Angeles or San Francisco, conforming loan limits are 765,000 to meet the Fannie Mae guidelines. So meaning that the loan amount has to be that or below. In most of the other counties in the U.S., it's around 465 and some change. As long as you're within that criteria and you meet the other requirements, then the interest rates are phenomenal. You're talking about if this is a second home, your rate is fluttering around 3%. We did see it dip a little below, and this is 3% at no origination points, meaning there's no bank cost to originate this loan. And as Donald had mentioned, since the recording of or keeping track of U.S. mortgage rates, it has never been this low, and we do expect this to kind of continue on. Jumbo loans, the pricing is improving. If you're over the conforming loan amount, there are challenges, but there definitely is decent pricing. The requirements are identical to what conforming is. It's just a matter of the number of banks that are willing to portfolio these jumbo loans until the secondary market turns back on. Tippy, next slide, please. So I think getting to the interest rates, a big question, and I would say we probably receive 4 or 5 emails, maybe more, every day, is people wanting us to analyze their current mortgage. Is it the right time to refinance? And I think the bottom line is, if you're a U.S. citizen and you meet the requirements that I had just discussed in the previous slide, absolutely. I mean, you're not going to find a better rate market than what we have now. And although the requirements have increased, what we've found, at least for the expats that we deal with, and I think we're doing probably about 27 transactions right now for expats. These are normally fairly high income earners. Their credit is very stable, and the reserve requirement doesn't seem to be an issue. So whether you're looking to get cash out, lower your rates, consolidate debt, or even just diversifying your portfolio, saying cash out and then using another loan to purchase another property, it's really it's a fantastic time to do it. Dippy, next slide, please. So I'll give you a little case study just so you can get an idea of the types of loans that we do. In this particular case, this was quite recent. Matter of fact, I think it funded a couple weeks ago. U.S. expat living in Hong Kong, working in the IT field. He had I think his rate was 5 1/4, and he had this loan for quite some time. It was a property that he owned in Arizona. He used it on short-term vacation rentals, but it was actually really the family's summer home when the children and the wife were away for the summer. So we looked at this property as a second home. We were able to get him a loan at 3.25%, fixed over 30 years. And we were able to give him a little bit of cash out that was able to help with some interior renovations. Now, the difficulty with this client, and probably a lot of the people that are listening online, is they're working for a global company. He was filing his U.S. taxes, but he didn't have a pay slip because his company, that's just not what they did. And of course, no pay slip, no W-2. So we were able to work with one of the specialty banks that we normally deal with, and we were able to get various measures that fit their requirement in order to meet the Fannie Mae requirement. So it was, it was a very satisfied client. He reduced his interest rate, got a little bit of cash, was able to renovate his kitchen. and increased his yield on the options that he did rent this property in the future. Dipti? So if you're not a U.S. citizen, and that's probably about 70% of our business, the foreign national lending pre-COVID, and I'll talk about it in that way, just because I think within the next few months, providing things kind of go the path of better, we will see this coming back to a norm. So pre-COVID, the options for foreign nationals that we had was tremendous. Being probably one of the largest brokers outside of or doing these types of loans, we probably have the most robust option of lenders. And because of that, even when a lot of brokers or banks had pretty much stopped their foreign national lending for the first, say, month or month and a half into COVID, we were still doing transactions. And that comes a lot to do with because of our share volume. Pre-COVID, once a month or on that basis, there were new lenders that were offering new programs. We were able to lend up to 75% loan to value on both purchases and refinances. Excuse me. The rates were in the mid 4% and upwards. And if you kind of keep that in mind, at that time, the U.S. borrowing rate for a U.S. citizen for this type of property was about 3.875. So we were very close to what the U.S. citizen rates were at a low LTV. We accepted foreign earned income. There's different levels of requirement, and these are still relevant, but it was even more relevant back then. And I'll touch on that a little bit, but we also didn't require any U.S. credit. And I think if many of you have tried to purchase U.S. real estate in the past, you'll find that without U.S. credit, many banks or mortgage lenders won't even consider your application. So in lieu of U.S. credit, we were able to use your country credit report. So just as an example, if you're in Singapore, you could use your Singapore credit in lieu of the U.S. credit. If for some reason you're in a country such as, say, Israel, which doesn't have a standard credit reporting agency, we could have taken a letter of reference from one of your creditors, such as Visa, American Express, that kind of thing. Getting to the foreign earned income. So there's 3 routes that you can qualify for a loan as a foreign national. And this is still relevant now, even though there are some adjustments. But you can use your tax return from most countries. They, of course, if it's not in English, will need to be translated professionally. You can use a letter, and I think this is quite common in countries such as Australia. You can use a letter from your accountant or if you're employed, from your employer, stating your last 3 years' income, and that's sufficient for our verification. Or if you're not able to use either for various reasons, or you just want it to be very private, we can go just strictly off of the rental income generated from the property. So this kind of contributes to the 97% approval rate that we have for our clients, because as a super broker and being able to have these origination platforms all over the world, we've figured out exactly what each client needs, and I think we've been able to find viable solutions for either. So, next slide, please. Okay, so post-COVID, the liquidity in the secondary market basically dried up. And if you were a lender, you really had to have some very deep pockets, or a lot of them just completely stopped lending. So we've seen over the last, say, month and a half, more liquidity come back onto the secondary market, more confidence, and in return, more lenders willing to offer loan products that were out of the bank box, right, such as foreign nationals. So the LTVs for these programs, this slide is not accurate, but the LTVs for these programs for a purchase right now is 65%. So the maximum loan to value you can get for a purchase is 65% as a foreign national. And the maximum loan to value for a refinance is 60%. So meaning that you're still able to get cash out. You're still able to make a purchase. It's just the LTVs are adjusted. And this is primarily because nobody really knows how the market's going to pan out once things settle down. Will there be a lot of foreclosures? Will investment properties be one of the first to go, or is it going to be owner occupied? So this is why there's been an adjustment. Now the rates are ranging realistically on something like this. If you're a foreign national but you have U.S. credit, you could probably still get in the 4% range, but likely you're probably going to be in the 5 to 7% range, depending on the loan to value and the type of income documentation that you have. But still, except foreign earned income, we still accept all three programs, and no U.S. credit is required for these programs. Next slide, please. So another case study, but relevant to foreign nationals. A Singapore attorney, also a real estate investor, was very, very invested into the Singapore market and also Hong Kong, and was looking to kind of diversify his portfolios into multifamily U.S. properties. So he purchased 3 properties in the U.S. In California. He was looking for higher returns, higher yields, and higher loan to value on the properties. If you were to take Singapore as an example, it's limited in the loan to value options based on your age, qualifications, and the number of properties you own. So in the US, it's quite unique. Depending on which way you qualify, which program that you qualify for, there's no age restrictions. It's illegal to discriminate against age, meaning that in this case, this gentleman was in his 60s. So in many countries that he would look to invest in, there would be restrictions on the tenure of the loan based on either his working age or set age. In the U.S., it's illegal to discriminate against age, as it is for many other factors. So this particular client was able to get a 30-year amortization loan, regardless of him being in his 60s. So we were able to use his Singapore credit report in lieu of the U.S., and we were able to give him a fixed borrowing rate of just slightly below 5%, fixed for 5 years, amortized over 30, and interest-only payments as well to increase his yield. So, Dippy? So I think that's it for my portion. Likely there'll be questions. We're happy to answer everything that you have. If for some reason you think of something later, feel free to email us. Our email is on the slide. Or I'm sure you can probably get in touch with Ronald, and you can get our telephone number or our WhatsApp number to reach us directly. Thank you, everybody, for joining, and we look forward to hearing from you. Thank you.
Thank you so much for that very informative presentation, Ronald and Donald and Robert. Okay, so we can accept questions now. First question is, how can we invest from India into USA? What all is required?
So I think if you're looking for the mortgage, it doesn't matter to us whether you're from India or Singapore or Hong Kong or Europe. It's the same requirements, and it's what I covered in the slides. You can finance currently up to 65% loan to value on a purchase, and the requirements are quite simple. We can send you the information directly, but it's basically a U.S. loan application. We would require the money that's being used in the transaction, so your down payment and whatever closing costs that might be, to be in some sort of financial institution. Doesn't need to be in the U.S., but if it's in India, it needs to be in an Indian bank or an investment company for a minimum of 60 days. And that's not our particular requirement. This is a U.S. money laundering requirement. As long as you're able to meet these requirements, we don't see any issue on being able to help you get or require U.S. property.
All right, thank you. Any other questions? Well, by the way, I will post the email address of Dipti and their general email on the chat box. So if you have questions, you can email them directly, or you can actually email Trade ITC if you would like to get in touch with GMG. We can still have time to accept questions. So if you have any question, type it in on the Q&A tab. Just wait for a few minutes if there's other question. All right, I think that's everything. As mentioned by Donald and Robert, if you have question that will arise after this presentation, you can reach out to them directly. And don't worry, I will be sending you an email update after maybe tomorrow, together with a recording of this webinar. So you can share the recording to your friends and colleagues. And if you have questions about them, just reach out to me as well, and I will forward your questions to Deputy Donald and Robert. So I think that's all for today. Donald, Robert, do you have any other things to say before we finish the presentation?
I don't think so. Thank you very much, everybody, and Sam for arranging. And feel free to reach out to us with any questions you may have.
All right. Thank you so much.
Thank you for the opportunity. Thank you, everybody.
You're welcome. Thank you so much, everyone, and stay safe. And we hope to see you again in the next webinar. Goodbye.